Okay, Matt the Mortgage Guy here. Wanted to record a quick video as a warning to consumers about mortgage quotes. Now, before I get into it, if you're watching this on YouTube, do me a huge favor. If you like good informational, educational content like this on a mortgage, go ahead and subscribe to the channel. If you smash that like button, more people see it. I can help more people out. So without further ado, let's get into it. Had a conversation today with a client who's buying a condo down in San Diego, and it's rather common that I have conversations like this. So I thought to myself, I've got to make a video to educate folks who are in the market for a mortgage. They're getting quotes, they're talking to different lenders, and they're making a vital mistake. So here is my warning to consumers in regards to mortgage quotes, what to look out for and what not to do. So he sends me the quote and he sends it to me through his realtor saying, oh, this is what this lender was offering. And this is the gist of it. Hopefully you can see that. 2.75 on a 30-year fix. Here's the principal and interest. Here's the taxes. Here's the insurance. Here's the total payment. And when I talked to him, I said, that's great, but how much does the 2.75 cost? Well, no, he told me this is just kind of an initial quote. I said, sure, but is the 2.75 free? Is it a half a point? Is it 2 points? You know, that's a big deal. Does it cost you $500 or does it cost you $14,000? That is a big deal. And I was trying to get through to this person. I made a video in the past that I might link down below about comparing loans apples to apples. Taxes, insurance, all this other stuff stays the same. No matter who you're working with, no matter what title company, lending company, all that stuff, all the prepaids, which you're gonna pay in advance, all stays the same. You look at the rate and the term and the cost for that rate. And then also in box A of a loan estimate, there's points being charged and different lender fees. But that's all you have to look at to compare apples to apples on loans. Here's what I see. You get a quote like this, and that's all the information you have. You're missing the most important variable. How much does that cost? And like I told this client, I'll put 2.25 up there. Or maybe I'll offer you 1.99 on a 30-year fixed. That's all you get. If that's all that matters and you don't care the cost of it, then someone's just gonna show you a low rate. But here's what I tried to explain to this client, and I feel like it's a simplified version that should make sense to most people. It's the equivalent of looking at a car. I'm not an artist, so forgive me, at two different dealerships. And dealership A, what monthly payment do you want? And people know this is an old trick. I'm gonna get you this car for $425 a month. Out the door. What are you missing? Is it $15,000 down? Is it 72 months? If this guy says, I'm gonna get you this car, it's $450 a month. If we were only looking at this, you'd say, oh, $425. But that's not all we're looking at. There's more variables. This one is only $5,000 down. This one is a 5 years and not. So it might be, you know, this one's got a 2.89% and this dealership's trying to charge you 5.99. These are just random numbers, but it's an example to show you that, like, don't just look at the payment and stop there. We've got a really good loan estimate that matches what initial disclosures say when you actually get into contract and you get a loan estimate, initial disclosures from a lender, and it breaks down every single fee you're gonna see. Me and my office, we believe that if we show people that and educate them up front, when the loan disclosures go out and these confusing loan documents start getting sent to people, we're like, all right, we gotta sign, we gotta get rolling. If we educate them first, they're gonna understand it better and they're gonna have a better experience. So that's just my quick public service announcement that please, when you're shopping for loans, make sure you're getting the right information. As a consumer, I understand you don't even know what's the right information to get. Oh, this guy told me 275 and my payment was 3130. Oh, this guy told me 2.875 and my payment was more. Well, did they estimate different on tax and insurance? Did they use a different loan amount? There's so many different variables. You have to be able to compare apples to apples. And I've made videos on it before. You know, we're never gonna stop this salesman mentality that some folks might have where they're trying to sell you. I hate to break it to you, but you're gonna talk to some mortgage people on the phone that are just downright trying to sell you. They treat it like it's a sales job, and it's a short-sighted mentality, and these folks aren't, you know, continuing to get referrals and grow their business and do things like some of us are and grow organically like that, but they're out there. And so as a consumer, you've got to do what you can to protect yourself. All you really need to do is say, hey, do you have some sort of loan estimate? Do you have some sort of, you know, something you can show me that shows everything? And then it becomes a game of taking these different loan estimates that are presented in different ways and figuring out what means what. I made a prior video about it where it's the rate, the term, the cost for the rate, and any lender fees. That's all you look at. There's all the other stuff that's gonna vary. There's other parts of the transaction that have nothing to do with the lender. The title fees have nothing to do with the lender. What they're gonna collect for prepaids on tax and insurance, nothing to do with the lender. So if you know what you're looking for, it's rather easy to compare things apples to apples. But what is gonna happen, the case earlier today in the conversation I had with the client, not all the information was given. I told the guy there's no way that I can tell you if this is a good deal or not. Because that's the thing, an ethical loan officer is gonna look at an estimate, and in more cases than I can count on my hand, every single week I tell folks, you know what, you're in good hands. If that person works closely with your realtor, you're comfortable with them, your realtor's comfortable with them, you're getting a good deal. Go ahead. You've got your docs in with them, proceed. Other cases where it's like, well, you know, Quicken Home Loans and some guy you talked to in a cubicle, you've got no relationship with them, your realtor doesn't, it doesn't matter, you're looking for a second opinion, you know, then I'll tell you, all right, I can do that for $3,500 less. And it makes sense to change. But you're gonna get caught in this web of differing information, and it's hard to decipher when you're on that side, when you're a consumer. Trust me, I look at hundreds of loans every single month, and I've gotten stuff, something came from a credit union, something came from a direct lender, something came from a broker, something came from, you know, an online lender, and they're all presented in different ways. Impossible to decipher what's what. So, moral of the story, when you're shopping loans, don't be lured by an interest rate. Don't be lured by a monthly payment. In my opinion, just like the car dealer does it, it's a distraction. Oh, what is it you want to pay per month? Let's see if we can get you there. Oh, what rate are you looking for? Let's see if we can get you there. It's part of the equation, but it's not the whole thing. Because a true mortgage advisor, besides all the other things I've mentioned, is going to take your specific scenario. Okay, you told me that this, you know, isn't your forever house. You're probably going to be here in 3 to 5 years. We want to get you into a nice, comfortable monthly payment, but we don't want to pay a point or a point and a half to lower that rate because you might be selling this house in 3 to 5 years and moving on. So this rate probably makes the most sense on the rate sheet because, like I've talked about in other videos, the person who mentioned a rate to you, like, oh, this person has this rate. We've all got every rate. 1.99%, 30-year fixed. That's where it starts. A lot of these lenders' rate sheet goes all the way to, 4.5 or so, and everything in between. I can get you any rate you want. If it's rate only, and that's all you're focused on, you are not going to find the best mortgage. You're going to find the best salesman, or in some cases, the biggest liar. 199, 2.125, 2.25, 2375. What rate do you want? The costs associated with those rates is what's important. And then if one lender is charging a flat fee of $10.55 and another lender has we charge $9.95 this, we charge $6.95 that, you got the processing, you got the this, you got the guy that brings bagels every month, we got to pay him, we got a branch manager, he's got to get paid, and there's $4,000 in fees. That's also not as good of a loan, even if the rate is something that attracted you in. So do your homework, talk to someone you like and trust, a mortgage professional that can show you exactly what the loan's gonna look like. And like I said, and I'll say it one last time before we sign out here, the rate and the terms, the cost of the rate, and the lender fees. That's all you look at. All the other stuff, third-party costs and stuff that's gonna be the same no matter who you do business with. Another thing to keep in mind is that it changes day to day, but for the sake of this video and not making it last too long, I'm gonna sign out. If you got any questions at all, I lend in all of California, happy to help answer questions. Through anyone in the whole country, just know that I'm only licensed to do business in California. So if you're outside of California, I'll probably refer you to one of my many referral partners that are in different states. I don't get paid for that. I just refer them because I know they're gonna take care of you. I hope this helped. Bye-bye.